So I'll give it to you straight. This new stock that I'm talking about in this video, which I eventually bought, is actually LVMH. So I think this company probably needs no introduction. So if you do have a female in your household today, they probably own or have at least owned one item before under the entire umbrella brand of LVMH. Either in the forms of a Louis Vuitton bag, a Dior perfume, a piece of Tiffany & Co jewelry, or even lipstick or skincare from Sephora. So that's how pervasive LVMH is in the capitalist system today. I think it's common knowledge amongst the investing crowd that LVMH is definitely a high quality company with an exceptional piece of moat, brand equity. So I believe no one has any doubts about them losing their appeal as a luxury brand in the coming 5 to even 10 years. So the business has also performed exceptionally well via their various business metrics. They have consistent revenue and cash flow growth, crazy margins from 68% gross margin, 26% operating, and 20% net margin. ROIC, return on invested capital, in the teens, and I can go on. So I think one very underrated capability of LVMH is the entire machinery behind branding and the network effect. So some of you might be wondering, hey, what do I mean by network effect? How does LVMH even have network effect? So does the bags have a closed loop ecosystem that allows for some sort of an LV drop or something? So I'll put a disclaimer out here first. I'm not an expert in the luxury space, but before I invested, I've consulted a few friends that are quite into these things from a consumer's perspective. So here's my conclusion. The first thing is, of course, to smash that cute little like button so that this channel will feel a lot more posh, premium, and luxurious. Anyhow, one of the most important factor in luxury is perception. So everything is about perception management. So back to the idea of LVMH having the luxury network effect. So a classic case study was actually the acquisition of Tiffany & Co in 2021. So prior to the acquisition, Tiffany's sales has been slowing down, particularly amongst the young and affluent. So post-acquisition, Arnold actually launched a series of campaigns from marketing to partnership to reconstructing the brand identity and, more importantly, the association with the LVMH brand essentially caused this entire switch in perception. So that's the entire machinery and network in action. And Tiffany & Co is not the first brand turnaround. So it is an economic mode in action. So I believe when looking at an investment opportunity like LVMH, there is probably a lot of ground research already done by the investing community, and they do tend to have some sort of a premium being priced into it because, hey, every Tom, Dick and Harry out there knows about the quality of this company. Instead, I will focus on delivering the bear case for this investment so that we know how we can protect ourselves in the worst case scenario. Also, usually high-profile companies like these would have a lot of expectations being priced into the stock. Therefore, it is then our duty to perform our own diligence and to try to unpack what expectations are already priced in moving forward and the potential risk-reward from this opportunity. And that's of course what I'm going to do in this video. In this Christmas season, do you know what is better than receiving gifts? Of course, it's receiving cash vouchers. So Weibo's Money Boo campaign is doing exactly that. So after multiple successful launches and feedback, Weibo have since lowered their campaign requirements. Now, new users can take advantage of this. So all you have to do is to deposit a minimum accumulated amount of $2,000, activate Money Boo, and of course maintain the fund in the account. Don't forget that you'll also be able to enjoy cash vouchers ranging between $80 to $3,000 on top of the Money Boo yield. So Money Boo is essentially a wealth management tool designed to help you earn a yield on your idle cash while maintaining liquidity in your account. So the yield is generated by automatically investing your idle cash into the underlying cash funds. So I've personally participated in the earlier rounds of this campaign, and I'll see you guys on the other side. So for those without a Weibo account, I don't know what you're waiting for. Sign up with the link below now. So thank you Weibo for sponsoring this video. So the first bear case, it's of course the R word, recession. Intuitively, when the economy comes to a halt, people start losing their jobs, disposable income takes a nosedive, consumers have lesser money to spend on discretionary products. And if you can't even put food on the table, forget about buying that luxury bag or makeup. So unlike really high-end products like Hermes and Ferrari, where you need to join the exclusive clubs in order to even get called up for their entry-level products, LVMH operates like some sort of an ETF that holds many luxury brands under their belt. So an economic slowdown is going to hit their portfolio of brands much harder as consumers' purse string tightens. On a more nuanced level, some bears have been arguing that the 2021-2022 growth was artificially boosted by a few factors, such as the stimulus from the pandemic and revenge spending due to the lockdown measures and people just feeling exasperated. Furthermore, China being a large part of their revenue contribution is looking at some really tough years ahead due to the entire deleveraging and the reduction in wealth effect due to the property bust. So I think those are all very legitimate and valid concerns of LVMH as an investment thesis today, and I'm not here to convince you otherwise. In fact, the market has went through the entire tug of war in the later part of 2022 as the share price of LVMH suffered a 26% decline from peak to trough. From this perspective, I think it really depends on your time horizon and expectations of the world moving forward. So for myself, I'm not trying to trade around LVMH, and it's a company that I really want to hold for the long term, unless not barring any existential circumstances. Especially for many of these recessionary talks, I think we are going to be able to come out of this stronger. So my only strategy to hedge against such a scenario will be to dollar cost average in. So for now, LVMH actually makes up around 1% of my portfolio, and I'm definitely on the lookout when Mr. Market wishes to give me the opportunity to accumulate more. So I would still like to qualify that if the valuations is egregious, regardless of how high quality this company is, I will still refrain from buying. So I'll talk about how I look at valuations later on. So the second bear argument is their growth model, which is through M&A, mergers and acquisition. So in their case, M&A is actually the bread and butter of how they've managed to build out such an empire. So I did allude in the earlier part of this video that the entire machinery and brand equity behind this LVMH monster is what makes the acquisition so powerful, yet at the same time so valuable. But let's not forget about the second part of the equation, the risks involved, specifically valuation risks. So we have seen many times how many of the other MNCs have squandered shareholders' value, especially through very high profile, expensive, yet at the same time useless acquisitions, all in the name of synergies. Oh boy, Wall Street loved that word. They can justify any kind of valuations to shareholders just because of synergies. So it is true that LVMH has had a very strong track record of proving their worth. And I think through the accrual of the brands over the years, LVMH has proven that their corporate structure has ensured that there is a proper development and integration of acquisitions. So this track record does not promise anything in the future, but it is definitely a promising past. Lastly, it's of course on their valuations today. So for many of these high quality names, the biggest brunt of many investors are their valuations. So some of these are simply just too expensive, given that the US T-bills are offering right around 4 to 5%, and some of them generate earnings or free cash flow yield of less than 3%. How does that even make sense? Especially when one is risk-free, while the other is full of business and execution risks. So I think that's another discussion altogether, but you get my point. So over the last decade, LVMH was trading at a PE ratio of right around 18 to 24 times on average. So right now, they're sitting at around a forward PE of 22 times and a free cash flow yield of 3.2%. So knowing the current valuations is one thing, we have to also look at their growth moving forward too. So on the top line, LVMH is a rather predictable business with extremely strong pricing power. So they're expected to grow revenue by close to 7 to 8% in the coming 3 years. So assuming that they do achieve that 7% revenue target year on year for the next 3 years, that works out to around $108 billion in 2025. So assuming that they maintain their 19% margin, that works out to around $20.5 billion in earnings. A 20 times earnings would mean $410 billion in market cap 22 times earnings, 451 billion, 25 times earnings, 513 billion. And their current market cap is right around $380 billion. So as you can see, considering the predictability of their business, the outcome of your investment return heavily relies on the valuation multiple the market is willing to give at that point in time. And this is on a rather short time horizon, which is highly volatile and uncertain because it really depends on how they look at the short-term outlook of the entire luxury market. Today, I probably wouldn't classify LVMH as a fire sale selling at dirt cheap valuations. Instead, for prospective investors that want a long-term exposure into the luxury industry, I think LVMH is a rather good starting position to build knowledge and also to build exposure first. So when everyone on the street goes back to talking about how a recession has a 100% probability of happening, that is probably a good time to continue accumulating. So with that, do leave in the comment section down below whether LVMH piques your interest as an investor. And I'll see you in the next video, but more importantly, I will see you on the moon. Goodbye.